Thanks for clicking. The Bank of Canada has no idea what to do. This according to at least some history and today's interest rate announcement. And yeah, while the bank held interest rates at 2.25% this morning, citing a policy dilemma as its rationale, at its press conference held thereafter, it made it quite clear that the path of interest rates will be dictated by factors beyond its control.
We have no influence on that outcome. We're going to take things as they come.
With that said, we did get at least some idea of the bank's thinking, and the media's lack thereof, at that press conference.
The economy is weak, but it is not clearly in recession.
That's not what the Bank of Canada says.
Shut the f*** up!
So what I want to do today is take a look at the bank's policy rate announcement, also go over the press conference held thereafter, and then discuss what to look for next. Speaking of next, as we'll see today, while the central bank maintains at least a quasi-focus on inflation, we are expecting Canada's inflation data coming out from Stats Canada in just about 10 days' time, and we'll obviously have an update out on that data on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this rate announcement. On to the rate announcement. As mentioned, the central bank held its policy rate at 2.25% this morning, noting that it's facing a real policy dilemma. Raising rates to dampen inflation will hurt the economy, while lowering rates could set off increased inflation. And yeah, that's the crux of it. Full stop. We've talked about that before on this channel. We've been discussing these stagflationary worries on this channel since at least the war started on February 28th. And the bank sort of made an attempt to acknowledge the uncertainty that it's facing. On the one hand, the United States could impose more tariffs, weakening the economy even further, which would lead to rate cuts.
Alternatively, if the conflict in the Middle East continues and higher energy prices start leading to ongoing generalized inflation, monetary policy may have more work to do. There may be a need for consecutive increases in the policy rate.
Well, that's not really an alternative. It's not an either or. Both could in fact happen. We could get more trade restrictions and the war could continue, or neither could happen. No one, except maybe TikTok realtors, knows where this is heading. And that uncertainty was obviously evident throughout the press conference held after the policy rate announcement, with Thomson Reuters confusing time and money.
You say you're going to look through the near-term impact of energy prices lifting overall inflation, but at what point do you stop looking through the near-term impact? Is it 1, 2, 3, 4 inflation prints in a row that you don't like, or suddenly the number spiking?
The governor had just noted that the bank was looking for evidence of broad-based inflation, not a September, October, November deadline.
We'll be watching closely for evidence of a broadening in price pressures.
Meaning they're looking to see if those higher gas prices are making their way into the price of goods and services. They look at the data, they look and see where the economy is actually heading, at least in theory.
It's less about the timeline, it's more about the conditions.
Well, yeah, while the media is ridiculous, we already knew that, this does help to confirm what we've observed on this channel. Continue to watch that month-over-month core data. That's what the bank's looking at. They also look at the money supply, which isn't going anywhere, but they'll never say that out loud. Next, the governor was asked on the GDP miss whether or not that's changed the bank's thinking on the timing and the need for interest rate cuts.
Big picture, not a great deal really has changed since our last decision. The war in the Middle East is still ongoing. Uncertainty about U.S. trade policy remains. The review of CUSMA is ongoing. And the data overall there have not been big surprises.
And yeah, I think that's probably how they're thinking. That's why we have so much uncertainty. The war and the trade war. Full stop. That's what the bank is looking to, and unfortunately, there's just no answers there as of yet. But on that note, on the economy, watch this.
Do you believe Canada's in a recession right now?
Look, the short answer to that question is, based on the data we've seen to date, the economy is weak, but it is not clearly in recession. So let me just unpack that a bit for you. If you look at GDP is roughly flat over the last 12 months. If you look at the labor market, it's up a little bit over the last 12 months, essentially flat over the last 6 months. Economists typically define a recession as a significant broad-based decline in economic activity.
When exactly did that start? When I was coming up, a recession was defined as 2 consecutive quarters of negative real GDP growth. GDP growth adjusted for inflation. When exactly did they start playing around with this? let's do our part to find some answers, and we'll check with the Bank of Canada, who defines a recession as 2 consecutive quarters of negative economic growth, as measured by real gross domestic product. So, according to the central bank, according to the governor, we are not in a recession, even though, according to the definition of a recession as defined by the Bank of Canada, we're in a recession.
How good is that?
And then moving on, while the Globe and Mail and Reuters this time around didn't make the governor laugh, the Toronto Star certainly made him frustrated.
Are you expecting a resolution to the CUSMA negotiations anytime soon? Can you just give us some color on that?
So,
the governor had just said they have no idea where trade is going, and the Toronto Star comes up with this. And look, you can tell that he's frustrated by the question, and more so, you can tell that the senior deputy governor knows that he's frustrated. Anyway, he just went on to list some stats, retail sales, etc. He has no idea.
base case on CUSMA is that the negotiations continue to play out for a number of months. We haven't built in a big change one way or the other there in terms of our outlook.
And then finally, we did get a laugh out of the governor when Mace News asked him if government should be telling their citizens to cut back on energy use.
Shortages of naphtha and other materials affecting the production of plastics and resins, which could lower the supply of appliances, vehicles, and medical equipment to other regions. So when this is happening, don't you think there's a need for governments to ask households and businesses to use less energy during the peak times and seasons to help central banks control inflation and mitigate its impact on economic growth?
Well, Max,
look at this. He's laughing as the senior deputy governor has to answer the question, and then the senior deputy governor answered it.
Well, Max, that's not a decision the central bank makes.
Whoa! And you can see she's trying not to laugh, and then this guy doubles down.
Okay.
Governor, you don't have any answer?
No, I think we'll move on. Our final question is...
And with that, Mace News is on the board for this year's Funniest Journalist of the Year award, now tied for 1 with Globe and Mail and Reuters for asking a question so dumb the governor laughed at it.
Here's your sign.
Really? This guy is loud at the press conference, but mortgage brokers are just a bridge too far?
Yeah? What else did he say?
Regardless, not a whole lot new at this press conference. The central bank is holding on rates. It doesn't know, but it has reiterated what we said so much on this channel. It's going to be the war, it's going to be the trade war that dictate the path of interest rates going forward. They could have to hike if the war does end and ends shortly. They could be cutting in short order. We will obviously continue to track how the bank's dilemma plays out on this channel. Make sure you click like and subscribe if you want to get those updates. But for now, thanks so much for watching.